Hey everybody, welcome back to another night of My Life Has Destiny podcast, where y'all know me. I am one of your hosts, Coco Fenton. Quint could not be with us tonight, but you guys will see her next week sometime when we come back with another guest. I think that we're gonna slow some of the shows down until June because we have a lot of new stuff coming down the pipe, and we'll be bringing some stuff to y'all. Y'all already know that the prophetic conference is coming up on July the 30th, so please don't miss that. I'll be posting the link for you to be able to register for that via Zoom here Thursday evening or so. Also, we have some other events coming up that are coming from some of the other radio show hosts, from our owner Fred, and from also from Bobby. She is having a prayer breakfast on this Saturday, on May 21st. It will be in Charleston, South Carolina. So if you are interested, please let me know so I can let her know. It is a cause behind it because it is a catered event. So it is $35 a person, but you don't want to miss it. I promise you, you will enjoy. We'll be sitting out on the water in a gazebo, um, talking about the Lord, talking about some good stuff, saying prayers, and just encouraging one another. Because right now, during this pandemic, it's a lot going on. You never know what a person is dealing with. So everybody needs somebody to lean on at this time. And that is what we are going to be doing together on Saturday in Charleston, South Carolina with Bobby. So she will tell y'all a little bit more about that tomorrow night on her show at 8 o'clock. So please make sure you tune in for that. Well, I have with me a wonderful guest tonight, as you guys can see, Mr. James Watkins. Not only is he my friend, but he is also my cousin, y'all. So please, 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 please give him a nice little introduction round of applause, as we always say. Um, as we always say. And I'm going to tell y'all a little about what he's going to talk to y'all about tonight. So, tonight, what we're talking about insurance. Mainly, we're going to talk about final expense insurance because everybody needs it. You know, it's a lot of people passing away. I've seen so many people pass away, and the families are having to start GoFundMe because there's no final expense insurance. So I truly feel like this is a much needed show tonight. And that you guys can get some really good pertinent information from what he's going to say. And I want you guys to really just take the time to take some notes, listen to what he's going to say. I'm going to pin his website into the chat here in just a second. And then once I do that, if you guys have any questions or actually want to get enrolled in life insurance, please feel free to click on his link and set up a consultation and go from there. I promise you, like I say, you will not be disappointed because final expense insurance is really, really needed at this time. All right. So before we go into that, y'all know how I do. I drop a little nuggets before, right in the beginning of the show. So I do want to say this, y'all. Life is short, right? Life is too short to be holding grudges against people. Life is too short to be just acting like you can't get it together. There's a little saying that the older folks used to say back in the day, and some of them actually still say it now, where they say, "Don't let it be said that you waited too long to get your house in order." Right? Don't let you find yourself in a place where you have not gotten things in order. And I don't just mean your physical house. I mean your soul well-being. Your whole man is a house. Okay? Not just the physical part of the house that you live in. So get yourself in order. Time come and things happen, and we know that we can't control what life does. We can't control what happens in life because some things are beyond our control. But at the end of the day, we know what's right, we know what's wrong. So I'm telling y'all, and I have said this before, and I'm pleading with y'all again. And no, I'm not saying it just because I have just recently experienced a loss, but I'm telling you because it's important. Get your house in order so that things will be right when that time comes. So that things will be right when they need to be right. You don't want you don't want to find yourself in a place where your last moments you are calling and asking God to do something that he could have done for you this whole entire time. Life happens. You know, I had a friend of mine, she preached life happens, but it's about what happens in the middle. The what happens in the middle is what makes your story. At the end of the day, what are people going to remember when it's time for you to leave here? So this is really, really important, and it ties into what he's going to talk about tonight. So without further ado, I'm not going to prolong it. I'm going to allow him to get straight to business. And while he's doing that, I'm going to be pinning his information in the chat. When you come in and you come on, please say hello and like and share. And then if you have any questions about anything he's getting ready to say, put it in the chat and I'll put it on the screen so that he can see it. Thank you guys. Go ahead.
All right. Thank you, Camaria. Thank you very much. As you guys know, me and Camaria are cousins by the Most High's grace, and I appreciate the opportunity for bringing me on the show, the podcast. It's a blessing, and also it is a joy to come on your show today to actually talk about life insurance. Because when you actually look at our people, there's two things that we don't never talk about, or just people in general. There's two things: debt. That's the number one thing that we don't talk about, and death. That's the second thing that we don't talk about. But when you look at debt, who doesn't have debt?
Right.
I'm pretty sure everybody that's on this live or anyone that's going to actually watch this live, we all got debt of some sort. Whether we younger in life or whether we older in life, we have some debt that we got. We might have a house, we might have cars, we might have credit cards, loans, whatever the case may be. We have some sort of debt or something in that matter. On the flip side, we also death. We all gonna meet that at some point. That's we got to address the elephant in the room, and that's one of the elephants in the room. It always happens to the fact that when someone dies, guess what? I see GoFundMe's go up real quick. But while they're alive, I see them posting that they going out to go eat, like once a month. They spending, 50 to 80 to $100 every time they go out to go eat. And so that same money that you funnel into your going out to go eat or whatever you like doing. You might can have a shoe fetish. You like shoes. You might can have a clothes fetish. You like clothes. So you take your time to take your money. Now, don't get me wrong. You can do whatever you want to with your money, but at the same time, it's about responsibilities. And as adults, we have to put our responsibilities and also our what's the word I want to use? I'll just leave it at responsibilities. We want to put our responsibilities at the top. And one of the responsibilities, if you've seen one of my posts on my page, is legacy. Legacy is very important. Whether you got children or you don't got children, legacy is important. And so you have to ask yourself, what legacy am I leaving behind?
That
You
part.
can leave behind a legacy where you left debt behind, because a lot of people leave debt behind and their loved ones have to take care of that. But guess what it does to the loved one? Not only have they lost their relative or their son, their daughter, their sister, so on and so forth, whatever the case may be, but now you have left debt behind for them to clean up. Just a painful reminder. In other words, who wants a painful reminder? You
Right.
know, I went to a going away in California a few months back last year, and it was a what was called a celebration of life. Now, a young man died, and as he died, Instead of them having a funeral, they actually had a celebration of life. They celebrated his accomplishments. They celebrated his life. They celebrated his legacy. And as they celebrated that, yes, of course, it was crying, but it was the most beautiful thing that I have ever seen in my life, because it was tears of joy, to look at what this young man had left behind. And not only did he leave behind that legacy, but he left behind something for his family to build on,
Right.
and so you have to ask yourself, what am I leaving behind for my family to build on? What am I leaving behind? And that's a question that we don't sit down and talk about. For myself, I'm guilty of that. The reason why I'm guilty of that, because before I got married, I've been married going on 8 years now in July, and I got three beautiful children out of that marriage. And before I got married, never thought about life insurance, and it ain't come to my mind whatsoever. But when I got married, my wife said, "Hey, babe, we start having children, hey, we need to have some life insurance in place." Even my in-laws, "You got life insurance?" "No, don't know nothing about it." And so a guy came to my house, sit down with me, and as he sit down with me, I signed up for some life insurance. But unfortunately, I actually let that life insurance go. Here's the reason why I let it go. Whenever someone else presented something that sound good to me, I hopped on that ship. The reason why I hopped on that ship, because the first guy that actually came, he didn't really educate me on life insurance and what I was getting. So when the second person came, the second person showed me something that the first person didn't show me. So I'm like, yeah, I trust you. I know you. I trust you. Let me come over here. So I went over there, and so on and so forth. But the end of the moral of the story is, I got life insurance because if something was to happen to me, I want to have my wife some money set aside, because I'm the sole breadwinner. My wife is a stay-at-home mom. So if I was to go, what is she going to have left behind? Because it's going to be a big gap left there. And that's what we don't talk about, those gaps. When someone dies, it's always going to be a gap left there. And what's going to fill that gap? That's what you have to ask yourself. And so that's the reason why I got life insurance. My wife educated me, said, "Hey, you need to get life insurance." A guy happened to come to the house. I got life insurance. And from there, it was a continual learning process that I started to have at that particular time. And so when I got my second life insurance policy, um, a little while after that, my sister died. And of course, my sister, Kizzy Watkins, she passed. And in the process of her passing, she had actually got some life insurance. She just went on the line. She didn't actually talk to anybody. She just went online, got the life insurance policy. Next thing I know is she passes, a year later or however long it was that she had the policy. And whenever me and my family went to go, claim the policy, they pretty much found a loophole, just like any other insurance company, whether it's you dealing with auto, life, home insurance, they always looking for some type of loophole. And so they found a loophole with my sister, and they decided, hey, we're not going to pay. We're just going to give you all the premiums back. And so for myself, I pretty much said, you know, when it got presented to me to become a life insurance agent, I said in my mind, I said, yeah, I can get educated now, because I seen what happened to my sister.
Mhm.
These insurance carriers and so on and so forth, they didn't let my sister know this. But guess what? Now I have the opportunity. I have the opportunity that I can educate my people, and I can actually share with what's going on with this particular policy. And so I actually literally just had a conversation with someone yesterday. And as I had that conversation with them, that came up. And so what happened with my sister was what's called a contestability period. All right. So this is with any insurance company. That's whether you write with me or the next agent or go get it online. They have a tool in place that's called a contestability period, and it lasts for 2 years. So say for instance, if you got a policy today, all right, 2 years from today, 2 years from the day, or within that 2 year period, they can contest that life insurance. What does that mean? What that means is they're going to look at your application. They're going to look at all the information that you put on your application. They're going to look at your MIB, which is the medical information background. So just like how we have a background, that tells us whether we've been charged with felonies or whether we've not been charged with felonies. We have backgrounds that tell us where we worked at, whether we worked at, Piggly Wiggly or worked at Lowe's or Walmart, or you fix people credit, whatever the case may be. You have a background that shows you everywhere where you worked at. Well, it's the same thing in life insurance. In life insurance, they have what's called a MIB. The MIB shows your medical history. It shows what medications you have been taking. It shows, even when they look up your driving history, it shows whether you had a DWI, if you're a smoker, a non-smoker, and so on and so forth. And so what they do is they look at your application and they look at your medical history. They look at your driving history. They look at your circumstance and they look at it and pretty much do an audit. They say, look, this information is true. This information is not. And whenever it's not true, guess what? The insurance carrier is going to say, well, you wasn't truthful on this particular area. So guess what? We're not going to pay out. And so I tell everybody who I sit down with, I need for you to tell me the truth. I need for you to be straight with me. Don't leave no loopholes whatsoever, because if you leave any loopholes within that 2 year period, if something was to happen, there's a possibility that, hey, that insurance company might not pay out. Now, if you tell the truth on this application, guess what? They're going to pay out. They're going to pay out good. Whether you got a $5,000 policy or $1 million policy, it's going to pay out good. And so we have to make sure that we understand this. And so with my sister, none of us understood this. We seen it and we was hot. We was mad. You ain't going to pay out. She don't have this policy, so on and so forth. You ain't going to pay out. But then when I got educated, it made sense. And that's what people are lacking today is education. And so my goal in coming on this show today is to educate. Where there's education, they are individuals that say, hey, yep, I want to go with that guy. He's trustworthy. Not only he's trustworthy, but he's the individual that's going to tell me straight like it is. I'm going to give you the black and white. It ain't no gray areas with me, because where there's gray area, guess what? I have somebody that will come and get life insurance, but stay on my books for 6 months. And then 6 months out, after 6 months, they let the insurance policy go. Well, if they let the insurance policy go, then I haven't did my part. My part is to write an insurance policy for you, and then you become my client for the rest of your life, or for the time being that you have the insurance with me. I want you to stay with me. But in order to ensure that, I have to educate you on it. And so it's many different types of life insurance. You have mortgage protection. You have final expenses. You have life insurance. You have college savings plan, asset protection. You have tax-free retirement. You have all these different type of products, or all these different types of life insurance that actually work in many different facets. But a lot of people don't know these things. A lot of people, the only thing they know is two type of policies. They know term policy and they know a whole life policy. Mm-hmm. That's all we know. But how does these policies work? What is the benefit of getting these policies? That's what you have to ask yourself. And a lot of people don't know it. Why? Because you have an agent that comes into the house. And when that agent comes into the house, they pretty much sell you on a policy that they have. And guess what? It sounds so good, you go ahead and get it. It happened to me. I wasn't educated. Man, that sounds good. They can do this and they can do that. That sounds good. Let me get that. So I turned around and got it. But then I learned later on down the line, 7 months later, that wasn't the correct policy for me. So guess what I did? I swapped companies, you know, and so as I swapped companies, now I'm with a new company, but I still didn't know everything. So what she shared with me about the last company, guess what? The same thing was going on with her policies as well too. So I said, you know what? Once I got presented, hey, become a life insurance agent or broker, I'm gonna go all in. And if anybody know me, they know that I'm gonna go above and beyond for you. The reason being is because I want to help any and everybody who is available or that who want to sit down and talk with me, because people don't know these things. They don't know it whatsoever. And so it's very important to know what your circumstance is. And that you know what your circumstance is, and you sit down and talk with me, we're going to sit down and we're going to strategically plan how to get you protected, whether that's with final expenses, whether that's with mortgage protection. And I'll just tell you a little bit what those things is. So, say for instance, with mortgage protection, it's a term product. All right. A term product means that it's going to terminate. It's going to go for an extended amount of time and then it's going to terminate, right? And so what I do is, or what I like to do is, if I'm going to write a term policy, I'm going to write a policy that has what's called a return of premium on it. Now, what's a return of premium? A return of premium is, let's say, for instance, hypothetically speaking, you get a term policy that's 30 years, right? Now,
Mhm.
one thing about insurance companies is they're going to give you the smallest rate on these term policies. Why? Because they betting on you actually outliving the policy, right? And so if you outlive the policy, let's say you paying $50 a month, all right, and you just get a straight term policy without a return of premium, and you paying $50 a month. So with that $50 a month, you let's say you times that by 12, right? So you got $50 that you paying for 12 months a year. That's $600 a year that you paying in life insurance. Well, you times that $600 by 30. So in 30 years, you would have put $18,000 into that policy. 18. And you actually outlived that policy. So $18, you mean $18,000 pretty much have went down the drain. Now, if you had passed, then hey, your family will be sitting good. You know, they'll be able to bury you, plus get on their feet after the fact. You know, start their own business. You know, with the money that come and so on and so forth. But when you outlive the policy, you pretty much have put your money into buckets with holes in it. And so what I do is I educate the people who I talk with. Now, if you want that type of term policy, I don't mind writing it, you know, but at the same time, if I'm going to write you something, I'm going to educate you first. Now, what a return of premium is that same $50 a month that you're paying every month for a year or for 30 years, however long you may have that policy. It may be a 30-year policy, a 25-year policy, a 20-year policy, or whatever the case may be. All that money that you put into the policy, I can write a policy for you where you actually get 100% back of all the premiums that you put into the policy. You know, and that's called a return of premium. So if you outlive that policy at the end of 30 years, let's say you got it whenever you was in your 20s, you 25, it's 30 years later, you 55 now, you got $18,000 that come back to you, right? So with that $18,000, what I educate people on is go drop it into an annuity, right? And annuity is something that older people use. They use it for retirement purposes, you know, but it is twofold. It has a death benefit connected to it, but it also has a cash value connected to it that you can use for retirement purposes. But the thing is with this term policy is you have now what's called a savings account. That's how I look at it. You know, and so when you have this term policy that's going for 30 years, you put money into it just in case if you was to pass, guess what? Your family got that whole death benefit. But if you outlive that policy, now instead of you don't have no policy whatsoever, now you can actually take the money that you have saved up inside your life insurance policy, and now you can go purchase another life insurance policy that's for retirement purposes. Because your prime years that you live is normally like between 20 and let's say 60 years old, 25 to 55, so on and so forth. Those are the years that you are prone to die. You know, some of us may be in a car wreck. It may be a straight bullet, so on and so forth. We just going to keep it black and white, you know, so on and so forth. It's things that happen to us that sometimes it's just like, wow. You know, and Kamari, I know you can understand when you look into our community over the last 8 years, how many people have we seen in the town of Maple Hill pass? People our age. I'm 40. You know, I'm 40 years old. People my age and younger are passing.
Yep.
You know, and so me, yes, I want to offer you the best because I know everybody has they have a bad taste when it comes to life insurance, and that bad taste is only thing I hear: the premiums cost too much money. The premiums cost too much money. I don't want it. I don't
But
want
they don't. But they spend more than $50 a month eating out.
it. Yeah, they do, but
They spend more than that eating out.
I
So if
know.
you can, right. So if you can afford to eat out, you can afford to take care of your life.
Mm-hmm.
correct. That's the truth.
That's
But
crazy to me. I would rather. I would not. This is just me. I would rather take care of my life than to go to McDonald's.
Right.
right,
When McDonald's gonna help put you in the slow grave anyway. So I mean, that's what I would rather do. That, that doesn't make sense to me, But I know that people do that all the time because they're looking at the fact of, okay, well, I can't afford that, but if they actually stopped and looked at what they waste money on, you could.
yeah, we don't have our priorities in order. You know, that's the thing. You know, and so this is where I come in at. I'm not here to um um talk you into getting a life insurance policy. I'm here to give you facts. The fact is, you don't have to spend $80 a month. This is just going out to eat one time. I'm a married man with a family of 5. So when I go out to eat, I'm spending $80 plus every time I go out to eat. That's a given. That's a given. But why can't I take that same $80, put it into an insurance policy? My wife or even myself go in the kitchen and cook a home cooked meal.
That part.
Instead, instead of going out to go eat, let's sacrifice that $80 for the greater good. Put
Right.
my priorities in order. And
Right.
so as I put my priorities in order, and we ain't even got to put it on food. Like I said, people love sneakers.
Yeah, just waste money.
$100 plus a pop every time you buy a pair of shoes. And that's every time you buy. Why not take that? Just be content with the shoes that you got. Granted, yes, you can put away money every month and get you a pair, so on and so forth. But why can't you put away money for your life insurance?
Yes.
Because I'm telling you, when it comes to life insurance, you know how the rich keep getting richer. We know that it's passed down, but how is it passed down? Life
Right.
insurance. That's how it's passed down. They know about generational wealth, and that's what life insurance is generational wealth. And so as we talk about like mortgage protection, if you got a house, let's say you owe, it's 25 more years left on your loan. 25 years, you owe $25,000, not 25, $200,000 still left on that policy. I write you what's called a home protector policy, which is a term policy. And what this particular term policy is, if you was to say it's called a decreasing term. The reason why it's decreasing because as your mortgage goes down, so to your death benefit goes down. But your death benefit is pretty much if you was to die, it's going to cover your mortgage that you have.
Okay, so I want you to re-explain what you just said. because somebody in the comment section said this is real good, but I need you to re-say what you just said. So
All right.
you said on the mortgage protection, as the mortgage goes down, so does the policy.
Correct. All right. So what
Okay.
I mean by that is, so you have your mortgage, right? And this, and whoever I sit down with, they got a house. They say, "Hey, James, I want a mortgage protection policy." All right. A mortgage protection policy is a term policy, right? And so with this term policy that you have, let's say you got 25 years left on your policy. I'm going to find you a 25-year policy. Now, with this policy, it has a decreasing death benefit on it. All right. And so as you have this mortgage, of course, as you pay on this mortgage monthly, right? As you pay on this mortgage monthly, your mortgage is going to go down, right? And
Mm-hmm.
as your mortgage is going down, let's say you start out with a $100,000 policy. Let's say in January you got $100,000 policy, right? And you owe $100,000 on your mortgage. When you get to, this is 2022, when you get to 2023, you're not going to owe $100,000 on your policy. You're going to owe, let's say, 89 more $1,000 on your policy, right? So with your life insurance policy that you got, or the mortgage protection policy that you got, it's going to calculate that, right? It's not going to calculate it to the T, but you're going to start out 100,000. You're going to go down in 2023, and January 2023, your policy is going to go down to $90,000, right? The succession years go down to 80,000, 70,000, because when you get to year 3, you're not going to owe that same $100,000. You're going to owe $70,000 on your mortgage, because it's called mortgage protection.
Okay.
If you was to pass that same, whatever you owe on your mortgage, what you have in that particular life insurance policy, guess what it's going to do? It's going to cover that mortgage, so that whoever your seeds that you have behind you, your children, they have a house that's already paid for. They ain't got to worry about it going probate. They don't have to worry about it going into anything, right? And so some people, they want that policy. Yeah, I just want a mortgage protection. I want to protect my mortgage. Just in case if something happened to me, my house is paid for.
Now, did you say that mortgage protection was term?
Yeah, it's a term policy. Correct. That's one of the term policies that I can offer, a mortgage protection, right? Another type of term policy I can write is what's called a return of premium, which I've already shared what that is. Those are term policies, and I can write the regular term policy, which is very inexpensive. You know, you can get $200,000 depending on how old you are, for a cheap price. I can do that, so on and so forth. So that's all the term policies that I can offer, right? And so, like I said, the thing is leaving behind a legacy. A legacy. Of course, when it comes to your children, you have to pour yourself into your children, and you leave a legacy behind like that. Also, when it comes to finances, you can also leave them a legacy behind. Don't leave them behind. Don't leave no debt behind. No, leave by something that they can build on. I have seen this personally. I've seen both sides of the fence. I've seen where money wasn't paid out. On the other side, I've seen where money was paid out, and the money that was paid out, well, some of my family members right now are doing very good for themselves because of the policy that paid out. Because why? They took the money, invested the money into themselves as well as into a business. And as they invested into the business, guess what? They became now business owners, owning their own business, doing very good for themselves. Now they setting their children up for the same success, right?
Okay, you have somebody. I'm gonna pop the question up. Tell me if you can read it.
What about people with cancer and other illnesses? All right, yeah. So when it comes to people with cancer, let's just tackle cancer, right? So when it comes to cancer, you got carriers is an automatic decline. Automatic decline. But it is one carrier that I can actually write you up in, and I'll let everybody know this. It's a company called AIG. All right. AIG is a company that will take cancer patients. But with AIG, the good thing is they can get you a policy, right? So say for instance, you're on the onset of your cancer. They say, hey, I'm gonna go ahead and cover you, but you are a great risk because you have cancer. And because you are a great risk, I'm gonna write you up in what's called a guaranteed issue policy. It's guaranteed that it's going to issue regardless of whatever your ailment is. But the thing about that guaranteed policy is within their guidelines, they say, hey, if you die within the 2-year period, in 2 years, if you die within that span, I'm going to give you back 110% of the money that you put into the policy. So they say, hey, I'm not going to give you 100%. I'm going to give you back 110% of that policy that you put into it, right? So you're not really losing money, but the insurance company is taking a risk by insuring you because you have cancer. So on year 3 on up, whatever your death benefit is, they're going to pay out the whole death benefit, right? And so the thing about AIG is if you was to die by natural cause or by cancer, they're going to pay out 110%. But say, for instance, if you went out and you died by an accident, they're actually going to go ahead and pay out the death benefit. So it's a difference. You have the natural causes or cancer, they're going to pay out the premium that you put into the policy 110%. On the flip side, if you was to die by accident, you go out there, you driving, and you die by an accident, whether it's by plane, whatever the case may be, if it's deemed an accident, the company is going to pay out the whole death benefit. All right.
Okay.
Does that answer your question? And reference to
So my question with that is just so we can get a little clarity, right? So if a person is a cancer patient and they live past or they live past year 2, make it to year 3 or 4, and if they still end up passing away, but it's still related to a cancer issue, is that benefit still paid out?
yes, the whole death benefit is paid out.
Okay.
The whole death benefit. It's just that year 1 and year 2, they say, hey, I'm gonna give you back 110%. Year 3, when year 3 hits, you're gonna get the whole death benefit, not the premiums. You're gonna get the whole death benefit on
Oh,
that. That's with cancer,
okay.
right? And so when you're dealing with other illnesses, say for instance, I wrote up somebody in a policy that he has diabetes, right? Because that's, of course, that's an illness. Diabetes is an illness that plagues, some people. So I can write up policies and they take into account that you got diabetes. Now they have a rating scale. You got a rating 1 through 4. Now with these rating scales, of course, you can be labeled a preferred, you can be labeled a standard, or you can be labeled 1, 2, 3, or 4. Now, those are different prices when it comes to that. Of course, preferred, guess what preferred is? Guess how much it's going to cost? It's going to cost less than a rating number 4, or it's going to cost less than a standard rating, right? And so with a person with diabetes, you have controlled diabetes and you have uncontrolled diabetes. Uncontrolled diabetes is a risk. It's a risk of losing legs. It's a risk of losing eyesight. It's a risk with uncontrolled diabetes. That means that you don't really care about your life because you're not doing nothing with it to control it. And it's
Right.
going to get out of control. So as the insurance company look at that, they saying, hey, you are a great risk to us. So I'm going to charge you a little. If I'm going to insure you, I'm going to charge you a little bit more money for that insurance if I'm going to cover you, right? But as that control, somebody who is taking their insulin, is controlled, they're gonna look at them and say, hey, I know you got this under control. I don't have to worry about you passing from diabetes because you doing what it takes to take care of your diabetes, so on and so forth. And so, of course, you're gonna get the better rate for your money, or you're gonna get the better rate with that particular insurance policy with that particular illness, right?
Okay, so I have another question.
All
So
right.
my question is, oh, and excuse me, because I don't want to be rude. James, meet my niece, Day, that's James.
How you doing?
Okay, so
How are
I
you?
have a question. So for people in like her case, right? So um, she has a 3-year-old now. So if she wanted to insure herself and insure him, right? For whatever down the line stuff. How does that work?
So it's two options. You got one option. The first option is if you was to get a term policy, he can be put on your policy as a rider, right? And so whoever your whoever your beneficiary is, of course, the money will go to them, and you can allot however you put a will in place, and you say, "Help, I want you to take all this, and take care of my funeral, and then this I want it to go to my son." You put a will in place. A lot of us don't talk about wills. Wills is also connected to life insurance, not in the sense of that it gets sold to you, but in the sense that you need to have a will in place. Everybody needs to have a will in place, and so you say, hey, I want all my money to go to this, I want to go to that, so on and so forth, because as it comes to life insurance, when it comes to your beneficiaries, if it's a child that's underage, they're not going to get that money until they turn 18, which is great, but they're going to get the money regardless. That's one route. The other route is you can get a whole life policy on that child. You can get you a policy as well as get your child a policy. It just depends on you and the money that you want to spend for the policy. And so if someone comes to me that has now I just wrote a policy up for a young lady in Colorado. She said, hey, James, I can afford $50. I got a child, just I'm a single mother. I can only afford $50. What can you find for me? So what I did was I went and looked for her a policy, and what I can find for her in her range, in her premium range, I found a return of premium policy. So I got her, I think it was like a $50,000 policy, and I got on her child $15,000, and her child was a rider on her policy, and it only cost her like $48 a month. She was happy. She was like, yes, this is what I can afford. Because one thing about me is when I sit down with you, I'm gonna find whatever your circumstance is, we're gonna talk about it. We're gonna talk about your premiums. I always ask the question, hey, what can you afford? I'm gonna give you three options. Can you afford $50 to $60, or let's say $40 to $60, $60 to $80, $80 to $100? Which one is within your price range? That's the question I ask. And so when they tell me that, my mind start turning. Okay, yeah, I could talk to them about this. I could talk to them about that, and then I start showing them numbers. As I start showing them numbers, so for $50, here's what you can get. For $80, here's what you can get. And I stay right within their range, because what happens is when it comes to agents or when it comes to individuals that's out for the money, they say, I'm gonna go above what they told me, but they're not listening. I was taught in life insurance that I'm not to take no food off your table. If I take food off your table, then I'm doing you a disservice. And so my job is to not take food off your table, but make sure that you can walk away with an insurance policy and be happy. So as it pertains to a young mother with a child, I'm going to offer them, or I'm going to present to them what is best for what I think is best for their circumstance. And I'm going to give them three options. Option A, B, and C. Which one works for you? The option A has this death benefit that costs this much. And you can write two policies, one for yourself, one for your child. You can go with B, where your child will actually be a rider on your policy. Or you can go with C, where you can get yourself a policy, this type of policy, and your child that type of policy, so on and so forth. But it's going to cost this much, meaning that the death benefit is going to be a little higher. And if the death benefit is a little higher, of course, it's going to cost a little more.
And
And
that's
so,
that's on the separated policy.
yes. Correct. So on the separated policies, so those are the whole life policy. So on a whole life policy, I can write the child as a writer, but I always like to write the child, let the child have her own policy or his own policy. Like right now, I got policies. I got a term policy with my children as writers, but I also got whole life policies for my children as well too, because I want my children to be set, or if something was to happen to them, I want them covered
So
on
you
both.
have both.
Yeah, I got both.
Okay. All
Yeah.
right. So what's the youngest age that you can insure a child?
The youngest age I think is 6 months. After
Oh,
6 months, they can be insured.
okay. That's great.
Yeah,
Okay.
6 months, 6 months and up, they can be insured.
Okay.
And
You
of
get
course, all the rates are different.
okay. You have another question.
Okay. How would you work it to insure a sibling who you cannot find? All right. And so with that is, of course, it's always different ways that you can do things. All right. Now with this sibling, if you okay, with the sibling, if you had all the information, we can definitely write a policy up. Because it's one thing about insurance that you have to understand. It's called insurability, or you have to have an interest with that individual. Like me, I couldn't, like some of the people that's on the live right now, myself, I couldn't just go write a policy on them. I couldn't, and so what you have to do is, as you find an individual or as you are looking for the individual, you will be the owner of that policy, right? But you have to understand, you have to know their social security number, you have to know their address, or even use your address, so on and so forth. Like I say, you just got to be careful with things like that, So it's like when it comes to putting insurance on a family member who you cannot find, it's a fine line when it goes there, And so you just want to be careful when you're writing policies like that, because then we go back to that contestability that I talked about earlier in the podcast, that contestability period that lasts for 2 years, and so you just want to make sure that if you was to write a policy, yes, of course, you're going to have to know their medical history, know what's going on with them, because if they've been going to the hospital in and out, their MIB is going to show whatever lifestyle or whatever thing is going on inside of their life, and it's a possibility they cannot be insured. Or
Okay, so I have a question before you keep going. So, and this ties that it's going to tie into what you're going to say, but can you name a few of the things that could cause a person to be denied?
yeah, am I able to share my screen? I mean, I can't share no screen on this, can
Yeah, I think you can. Let me see. Down on the bottom of the screen, do you see the button that says share?
No, I just see mic cam settings and chat.
Okay. If you send it to me, I can share it.
Okay. All right. I'm gonna share something with you. It's called what we have is called a cheat sheet, right? And what
Okay.
a cheat sheet is, it is something that I use when I'm writing up a policy, or when I want to know what's going on with an individual, can I insure them or not? These are things that we use when it comes to policies and so on and so forth. So say for instance, if I'm going with a term policy,
Mm-hmm.
I'm sharing it with you right now.
Okay.
Um, let's see. Hold on one
Sending
second.
it to you sending it in Messenger.
Yeah, I'm sending it in Messenger. Uh-huh.
All right. While I'm waiting for that, Dede, do you have any questions for him?
All right, it's a PDF that I just shared with you.
Okay.
All right, just let me know. I see when you pull it up. And so this is something that what I'm about to share right now is something that I use. But to go back to the young lady's question, I would say just contact me personally, and we can definitely talk about that. But like I said, it is a fine line there, because you would need to know their social security number and whatever is going on with their health, and they have to be a insurable interest there. Which with a brother and a sister, of course, it's an insurable interest there.
Okay. So with the insurable interest, as you say, um, what would be the cause of them? I mean, well, I guess that's what we're about to look at here, because I want to know, like, what are really some of the things that would cause them to say no?
Oh yeah,
Yeah,
we
that's one of the things for me. Is that's what I wanted to know, because I have always been very interested in that. And she said, "Thank you, by the way."
Oh yeah, no problem. Like I said, I'm here to educate on all ends of life, and like I said, we have only touched the surface of life insurance. We only right now we have only talked about the term. We haven't even got into the whole life products yet. Yep. So I'm just once you get that, you got it.
Yeah, I got it. I'm about to put it up here in just a second.
Okay. So yeah, if anybody else got any other questions, let me see. You can
Y'all
definitely.
already know. Post them in the chat, and I could pop them up on the screen so y'all see that he's been answering them as they come in.
Yep, AIG will accept all cancer patients.
Yeah, I've been pinning stuff in the chat as you talk. So all right. So let me see if it's gonna move past the share portion, because it looks like it's trying to freeze me.
Oh yeah.
You can keep talking though, and then when I get it up, I'll just post it and we can talk about it.
All right. So yeah, so what we've been talking about is term products, right? And so we also got what's called whole life products. Now, whole life products, it has two components connected to it. The two components is you got your death benefit. Your death benefit, of course, can range anywhere between $0 to $1 million, but it also has what's called a cash value connected to it. And what the cash value is money that build up inside your policy, right? And so with those type of policies, you have you can borrow against that cash value. We call that a private bank, right? And so with these private banks is you build up cash in it, and as you build up cash in it by paying the premiums every month, so on and so forth, or even put extra money towards it, it builds up what's called a cash value. Now, with this cash value, you can borrow against your own money instead of you going to the bank and borrowing their money with their interest, so on and so forth. You can go borrow your own money, right? But
Okay. How long does a person have to keep the policy to do that? Because I heard somebody else talking about it, but they wanted to know how long they have the policy in order to be able to do it.
yeah, normally it takes about 3 years, anywhere from 3 to 5 years, for you to start to build up that cash value in it. So normally, depending on what type of policy it is, some can begin on year three, some can begin on year five because it's a build up, right?
Okay.
But as it starts building up, every year you have because on some of these policies they work like the stock market, right? They build off the SP market or the SP stock, right? It acts just like it. So if the SP is doing very good, your interest on your policy is going to be doing very good. But just as soon as the SP goes down, instead of you going down with the SP, your cap is zero, meaning that it's never a loss with your policy. It's only gain. Yes, it may hit the floor, go down to zero, but you're not going to lose any of your money or any of your interest or anything that you have put into your policy. And so as it starts gaining, it's always going to be gaining, but It takes 3 to 5 years for you to start seeing that cash value inside your policy. Oh yeah,
Okay.
and I forgot to mention another facet of a whole life policy is called a reduced paid up. And what the reduced paid up is, say for instance, like myself, sometimes I sit down with individuals and I actually helped an individual. This was like maybe like 2 months ago. He had a policy that he started paying on it when he was like 30 or he was like 25 or something like that. And now he in his 60s and the policy had actually went up to like 400 some dollars a month. But
Oh,
he had what was called a reduced paid up in it. So he can cancel that policy, and as he cancels that policy, he can turn what's called a reduced paid up on it. And so with that reduced paid up on it, it was like 30 grand that was paid for the rest of his life. And he looked at me, he said, you know what? I got 30 grand of reduced paid up in my policy. All I want to do is get the 50 grand and I'm good. So what did I do? I went in there, I found him a policy around 20 grand that was right within his price range. And when I found right within his price range, we got him approved. Once he got it approved, hey, now go back to this insurance company, tell them to stop the payments on this policy, turn your reduced paid up on. So now he have $30,000 worth of coverage that's free, plus $20,000 that he got from me. And I helped them save $300 on this policy. So I helped him maximize on his benefits because that's what I like. I like to maximize. If I'm not maximizing on your benefits or whatever you have to help you save you money, but get you also a good death benefit, then I'm not doing my job. And so altogether, he went from paying 400 something dollars to now he actually has like 50 grand and he's only paying like $100 a month on this policy now. So I saved him $300 and he was so grateful for that. But a lot of people don't know nothing about the reduced paid up, and that goes with time. The longer you have the policy, the more reduced paid up you have in that policy, right? And so with that reduced paid up, yep. If you in a policy, let's say a State Farm policy, like I just literally got somebody out of the State Farm pharmacy policy last week. They had a State Farm, and with that State Farm, of course, they was in a term policy. When I started telling them about the policy, they was like, "Yeah, I did not know that." And when I started telling them what I can offer, they switched. Even like with him, he switched because he wanted to save money. And so the reduced paid up is very, very good in a policy, but it's only connected to the whole life policy. It's not connected to the term policy. It's only connected to the whole life policy.
okay. Okay. So, okay. See, this is a lot of information. That's why I say you got to have notebook and pad for all of this stuff. I
Hey,
mean, because
it's
there's a lot of stuff that if you didn't know, you would never know because people wouldn't tell you.
oh, I'm gonna tell you. I'm
Um,
I'm gonna
I
tell you.
mean, just well, some people just don't even understand the difference between the term and whole. And then to know that you can do mortgage protection, then all of the other stuff. I mean, that's actually like a blessing in itself
Yeah.
because when most people get ready to make arrangements or final arrangements to get ready to leave here, the first thing they want to know is, will my family really be taken care of? That's the real deal. For me, I think one of the things for me is, okay, so my personal thing of what I have asked for when it's my time is I don't want to have like this big burial. I don't want that. You know what I'm saying? I want to be cremated and all of that wonderful stuff because I want my family to be able to use the funds for something else. I
Hmm.
don't feel like nobody should have to pay 10 grand to put nobody in a box. I mean, that's just personal. You know what I'm saying? Like, I really don't feel like you should have to do that. I feel like that 10 grand can go to something else. Why spend 10 grand putting me in a box that's going to go in a hole and it's going to deteriorate along with me when you could just cremate me and go about your business. You know,
Yeah.
that's my way of thinking. You know, I don't feel like you should have to do all of that when that money can be used towards real stuff instead of instead of putting somebody in a box. But you know, with some people, they feel like, okay, well, it goes against my religion, and you know, X amount, whatever their reasoning may be. But you know, that's just a personal opinion for me.
Yeah. And
So
that's what it
that
boils down to. It boils down to
right,
preference. You know,
right,
whatever your preference is, I'm gonna cater to your preference. I'm not. I don't. That's my. Come say hey. So this is my oldest son right here, and so everything I do is for him, my wife, and my other two boys. You know, and so just I have to educate them as well as everybody who I sit down in front of. But
right,
yeah, as it comes to whatever your preference is, I'm going to cater to your preference. Rather that's dealing with how much you can afford, what type of policy you looking for, and what you're trying to do with that money. That's
right,
three facets. How much you can afford, right? That's the dollar amount.
right,
What you want to do with the policy? You want just final expenses? Do you want income protection, or do you just want something that's going to last for a specified amount of time?
right.
I'm gonna look at all these things, and whatever your preference is, I'm going to talk to you about your preference. I'm gonna stay within your guidelines, whatever your guideline is. you
Right.
know and so when it comes to how much that policy is going to cost, of course, if you 18, you just not getting, you smart, you say I want a life insurance policy right now. The younger you get it, the less it costs. The older you get, the
The
more it
more it
costs.
costs.
you know I just looked at a policy for an individual. She's 66. She said, hey James, I can only afford about $40 a month. So I went and looked at something that costs about $40 a month. She can only get about 10 grand. She looked at me, she said, look, 10 grand, that's there, but it's not enough. And I had to let her know, hey, because of your age, this is what I can offer for you. And this is actually the best price. So it's good to have something put in place so your family won't have to scramble even for that 10 grand. But you take that same $40 and you go to a woman or a man that's 18 years old, they can take that same $40 and get $100,000 worth of coverage. That same $40 or $200,000 worth of coverage with that same $40. Because the older you get, the greater risk you pose to the insurance carrier. That's why it costs more.
I hope y'all are listening now.
And so
Take advantage while you got an opportunity to take advantage, because I'm telling you, like we said in the beginning of the show, we have seen too many people pass away, and when they pass away, the families are doing GoFundMe's, and it shouldn't have to be like that.
yeah, GoFundMe, I look at that as a risk, or I look at that as a wish. I wish someone would help me bury my loved one.
Right.
That's
Because
exactly what it is.
it's no guarantee that you're going to get the amount that you asking for,
Correct.
and that you're going to get it in time enough to bury the person that you're trying to bury.
Correct.
So, you know, it's a lot behind it. And then you don't want to have to see that, especially with your own loved ones. I mean, if you would have known that you could have insured somebody from the time they were 10 up until whenever, and knew that they were going to be covered, I do it. I remember I used to see when all of my siblings started having kids, I started looking at the little Gerber life insurance thing that they had that was for the babies. And I started reading it, and I kept looking and I kept looking and I kept looking. And I was like, I got so many nieces and nephews, Lord, I don't know this to go work. Okay, because I got a whole lot of them.
Yeah.
And it's just like, you know, but when you sit back and you think about it, well, um, you don't know what's going to happen when your kids walk out the door now.
No.
I mean, look at what just happened while I was in New York, you guys. Luckily, I was not in that part of the city, but look at what just happened when this guy just walked inside the grocery store in Buffalo and just went to shooting people. Them people didn't know when they left their house they weren't going home that day. You never know what's going to happen. And the Bible even tells you that no man knows the day, nor the day or the hour. So if you don't know, you still have to be prepared for anything. And I just don't want to see people's families have to go through that, not knowing how you going to get something done. Not only does that suck, one, two, it's real embarrassing. And three, it's just like, wow, like what are you gonna do? And then it's like, well, where you gonna come up with the funds? Are you gonna have to sell something in order to get it? Are you gonna have to do this in order to get? Are you gonna have to go and take out a loan just to bury somebody? And first of all, do the loan companies even let you do that? Like,
No.
like I mean, it's just little stuff. Like if that's something that a person had to do, is it even actually feasible to get done? And I don't think that a lot of people, I don't know why they dread having the conversation of final expenses, because it's important.
Yeah.
It's something that you need to know. Well, what do you want to do in case of? I'm not saying that you're going to go out there and something's going to happen to you tomorrow, but what do you want done in case something happens to you? And who do you want to be over it? Who do you know that if you put it in your will, they're going to do exactly what you asked them to do?
Yeah.
Right. Because
go ahead.
I know for me, like this is actually, I didn't think about life insurance up until I joined the military. And even still, it was like, okay, I know it comes with the military, but I didn't think about it until I was hospitalized pregnant with my child. Like I didn't know. And they're like, do you have a will? You need to put this together. You need to put that together. Third, even when he went in the hospital for the very first time, they're like, do you have a life insurance policy on him? And I'm like, what? He's like, 2 months, and they're like, yeah, you need all of this. So it's definitely a conversation that most households need to have early, because I was half this stuff I didn't even know. Even with them telling me, they didn't give me any information. I was just like, well, the military got me covered. I know I'm insured because the military. I know I'm insured because I'm a veteran, but I don't know all this information. So this is actually really good for people that in teenagers, starting in teenagers, because I wish I knew.
Right.
Yeah.
But you think about, okay, so the military normally insures y'all between $100,000 to $200,000. That's a normal payout for y'all, right? Because I know when my brother died, that was like kind of the norm.
It's kind of dependent. So when I was active duty, it was 400, but it's also dependent on your discharge.
Correct.
So what you get. So if you get out with general, other than honorable, anything other than honorable, they can decrease it.
Yeah, and this is why this is another thing that I educate people on. Military is a job, no matter what branch you're in. McDonald's is a job. My job, STCU, the bank I work at, is a job. They have policies connected to it, but it's what's called a group insurance. And so with this group insurance, they have stipulations connected to it, to where if the insurance company sees something right within there, or like you saying, depending on what your discharge is, they can decrease it. They can do whatever they want to with it, because it's not your policy. You are not the owner of the policy, because that's what's important. You want to be the owner of the policy. The owner can do whatever he wants to with the policy. All right, regardless of whatever the beneficiary says. Because I ran into this issue as well too. A young lady, she told me she had an insurance policy that she was paying on for her husband, right? But she wasn't the owner. The husband was the owner. But behind her back, the husband made the mother the beneficiary and took the wife out, right? And so when he passed, whenever she was trying to take care of everything, the in-laws kicked her out of the picture. Because she wasn't the owner of the policy. And so we have to be very careful when it comes to job insurance. We have to have we need to put in place our own insurance, supplementary insurance, or let's say your job is your supplementary, right? Because like myself, I work at STCU. I got $100,000 policy at STCU that's tied within my benefits. If I was to ever leave that company for whatever reason, guess what?
You don't have that no more.
Yeah. And if I don't have my own insurance, then I'm stuck. I don't have nothing. And
Right.
so you shouldn't bet on your job insurance. Now in the military is good, but also on the flip side, the military or whatever is left behind with the benefits, especially after you retire, is not that great. And even
Right.
trying to get those policies, so on and
It's
so forth,
tough.
yeah, it's hard.
They give you a certain amount of time, and you still have to switch over, so you don't get the same policy that you get when you were active duty. They give you that much because it's line of duty, but as a veteran, you have to switch over to a different kind of insurance, and it's
Yep.
normally less than.
Yep.
Okay,
And it's very hard.
so that means that, and this is just from what I'm getting from what we're sitting up here talking about.
Oh, we
That
got
it's a good idea for you to get secondary insurance,
yes,
Yep.
agree.
right? Okay, so
Yep.
that
Get
right
your
there, you know what I mean? That's one of the, and I pinned his his
website.
website in the beginning, so it's one of the first things I put in there. But I'm telling you, like, it's one of the things that I feel like is very important. Again, I know it's like addressing the elephant in the room kind of
Yes.
conversation, as they say. Because I mean, I don't know why this is such an uncomfortable topic. I
Uh,
don't,
I
I
believe
don't
it's
know.
because people don't like to think about death, but considering the times that we're in now, because I know when I first, somewhat learned about it or heard about it, and I asked my parents what theirs were, or I asked my grandparents, and I'm like, who's beneficiaries, anything like that? Oh, we're not thinking about that because I ain't nowhere near close to dying. That was the conversation I had.
But see, I mean, my whole thing is not even about that. I know when I started having a lot of surgeries, I started making preparation. And that was just me because I'm looking at, okay, well, look, I got this going on. I got a whole, yeah, send it to me. Oh, no, I got it. But I got a whole family that I got to deal with. You know what I mean? I don't want my husband to have to figure that out.
Correct.
That's not what I want. I want him to be able to be it. I mean, it's hard to find peace when you lose somebody, but I want him to be at peace about the situation that he ain't got to worry about it. You know what I mean? That's like the biggest thing about it, and we talk about it frequently because if I make changes to anything or if I increase it, he knows it. He knows where all the paperwork is at. He's on it, and then that's what it is. He already know that in the event that you need help, I got a niece that's right here on the bottom of the screen. I got a sister that live around the corner, another one that's over here that's gonna make sure that stuff is getting done.
So
Nobody will allow him to have to try to be all over the place, that you have to try to figure it out. I got too many people that I know I could actually count on for that. So if in the event I know he may not be in a great headspace, that I still know stuff will get done.
correct.
So, you know what I'm saying? And that's like one of the biggest things. And I think that's one of the biggest things that really makes me glad about being able to write out a will, because you can literally say, well, this is what I want. If in the event that this person is not in the right headspace to get it done, this is the next person that I have elected to make sure that this, and this gets done.
Correct.
And that's how you do it, because that's how I want my yes, I want you to celebrate my whole life. Everybody know that I'm a praiser. Y'all better tear the church up. Okay. That's
Right.
what I want.
Those are
I
your
don't want
topics.
right. I don't want
Yep.
nobody coming in and being dragged, because I wasn't dragged. That's not me. When I go into the church, everybody knows. When I go into the church, I go for broke. You know what I'm saying? That's what you do. That's how you have to ask for things to be done. I want it to be upbeat. I don't want it to be dragged. I need y'all to
Yep.
part. You know
Correct.
what I'm saying?
Yep.
And that's what you
Yep.
have to say. So that's the biggest thing. So I mean, I truly believe that part is very good. Now I have a question,
Okay.
okay? 'Cause I don't know if this is a part of, if this ties into the insurance or not. But when you start talking about healthcare POAs, right?
Uh-huh.
Does that go with somebody's life insurance policy?
So, all right. So myself, I have my life insurance license. I was studying to get I'm in the process of studying to get my health license. Now, when it comes to life insurance and health insurance, they two totally different things in the sense that you have one umbrella and you have another umbrella. The and life insurance umbrella covers life insurance, while on the flip side, the health insurance covers the health portion of it. So they are two totally different things. And
Okay, the
so,
reason why I'm asking because I know that the healthcare POA kind of sort of goes with the health insurance, but I always thought that it kind of leaned more towards the other side. So
mhm,
that if in the event somebody has like a do not resuscitate, then that was a part of the person's POA, healthcare POA. We know we're not going to resuscitate because it's in black and white,
yeah,
and this is the person that you put over it. So now, if you made this person your healthcare POA, are they also going to be
no.
over
Uh,
your?
so when it comes to, let's say, when it comes to, if you have a power of attorney, because most people don't know what a POA is. So a POA is power of attorney. And so if you do have a power of attorney over someone, when that individual passes, if it's not a wife or anything else in place, then you actually be the one that cover everything in reference to that individual if a POA is in place. And of course, it has to be notarized, signed and notarized, so on and so forth. You just can't go get no POA, fill it out, and then sign it and think that that's going to work. You're going to need a power of attorney, but you also not just a health power of attorney, but you're going to need a expense power of attorney. Because you got one that covers the health side of things where you can, tell them what the doctors need them to do, but you also need the expense one where the individual gives you permission to pretty much do whatever do. You have the same permission to do with their money what they would do with their money, if that makes sense. It's the expense POA or power of attorney.
Okay.
So the health covers the health. It has to do with when you go into uh, the hospital going to say you got a POA or you got one. All right. So you can make the calls and so on and so forth. But you can't take that health POA, go into the bank and say, hey, I need to take this money out. They're going to look at you and they're going to say, this is not valid. You need an expense one. And so it is different POAs. So if you got the expense one or if you got a POA that gives you the jurisdiction over the life insurance, because with some companies, you just can't, when a person die, you go show them, hey, I'm the POA. You have to do it while they're still alive, because it's not going to be valid if they was to pass and then you go to the insurance company and say, hey, let me get this or let me get that, because they're not, it's a possibility it can happen. It's called fraud.
Right.
You can fraudulently sign that name up there and it's not valid because the individual signed it. So you want to make sure that you take care of that POA with the life insurance company while they are still alive. And you have to make sure also that that life insurance company accepts a POA, because if they don't accept the POA, then that POA is non-valid when it comes to the life insurance. But if they do accept it, then they, of course, is valid.
Okay, I have a question. This ain't my question. This is somebody else's question that just came in my inbox. So
Okay.
okay, and it's a doozy. So I hope you're ready. Okay,
Oh
so
yeah, I'm ready for everything.
the
I
person
got one
said,
too after.
okay, the person said, what do you do if you have a member of your family that collects insurance policies on everybody that died?
That collects. Hmm.
Right. So to me, from the way it sounds, that particular question, the way it sounds is this person gets insurance policies written up on the family members, and then they collect on the policy when people die. Is that even possible?
If it's an insurable interest there, yes, it's possible. But then, like I said, it's a fine line that what we talked about with the young lady that asked the question earlier. It's a
Okay,
fine.
so when you say insurable interest, right? So say if it's you and the family member that don't even talk,
Mm-hmm.
how is there an interest there?
Well, the interest is it's a family member.
It's
It's
a
a
family
blood.
member.
It's a blood relative. It's so on and so forth. So it's just
Right.
like right now, insurance companies, when you talk about beneficiaries,
Right.
right, the beneficiary is what's important. When you talk about the beneficiary, it has to be a aunt, uncle, it has to be a brother or a sister or even a cousin, so on and so forth. But of course, you have to produce these things. If you can't produce these things, if it's not a wife or a husband, a son, a child, brother or sister or a cousin, aunt or uncle, then there is no insurable interest there. Just like with the example that I gave earlier, there's a lot of homeless people in Washington State, because that's where I stay. I stay in Washington State. I can go out and see homeless people, galore. I can't go out of my door and go find John Doe and then drop a life insurance policy on it, because there's no insurable interest there. But I can go write a policy on my brother or on my mother or on my aunt or uncle, so on and so forth. I can put myself as a beneficiary, right, and collect that money off that, so on and so forth. But like I said, it's a fine line, because
Okay.
for one,
And I think that that's what they're referring to, because they're like, yeah, they said that they have an aunt that collects literally every time somebody passes away.
yeah. So what it is she has a life insurance broker or agent who she knows that help her write those policies up. And so, like I said, you have to talk to me outside of this podcast, and we can go into more details when it pertains to something like that, because it is a fine line. And I don't want to, put too much information out there when it pertains to that particular topic right there.
Right.
But yes, it can be done. But yes, it is a fine line there to get it done. So on and so forth. When it comes to that particular question.
I think that they were asking because they wanted to know if it was fraudulent.
Yeah, it can be fraudulent on one end. It can be fraudulent, but on the other end, it cannot be fraudulent. Like I said, it's a fine line. Sometimes some people don't want to give you their Social Security number, right? But guess what? They live in a life that's they gonna leave a burden behind. And you're like, no, you're not gonna leave a burden behind my family. So say, for instance, if you find out their Social Security number, then you find you a good agent. Y'all talk and see, can y'all work something out? Y'all work something out, and then, hey, boom, you got life insurance. But now it's at a place where you can actually cover them. But like I say, it's a fine line, because you have to make sure that this person's status as it pertains to health, status as it pertains to address, and so on and so forth, to make these things happen. Like I said, it's a fine line, but it can be done. I'm not going to sit here and tell you that it can't be done, but I also will share with you that, yes, it can be fraudulent. On the flip side, it cannot be fraudulent. It just depends on how the policy is being written up.
Okay.
Yeah. And so, yeah, like I said, my phone number, my website is our website. That's a team website. The website that she pinned it's a team website. So if you was to, go to that website, yes, you can look at it. But if you was to request information, there's a possibility that you might not get me. And so I would say jot down my phone number and give me a call. My phone number is 509-279-9721. And once again, it's 509-279-9721. Give me a call. And like I said, we can talk. We can discuss anything that you want to discuss. Because like I say, my job, or the reason why when Camaria, invited me on a podcast, I want to educate. And like I said, we've only touched a portion of life insurance. Like I said, it's more things than just a whole life, because, like I said, I have a durable power of attorney. My children are my agents. And so, yes, even like with this durable power of attorney, if your children, wanted to write a policy on you, they can write a policy on you, so on and so forth. Or if you write a policy yourself and you make them your beneficiary, of course, the money is going to go straight to them. You can have them as the owner, or you can be the owner, right? But it's depending on what type of policy you write up. When it comes to a term policy, the term policy is stipulation as it pertains to age. And I learned this recently. You know, I had a mother that said, "Hey, I want to insure my child." You know, and the child is 39 years old, and the mother is like, I think 60, 66, 67, something like that. And she said, I want to put the child is living a reckless life right now. And, you know, they're not in trouble, so on and so forth, but they're not living the best life. And they say, look, I want some insurance on my child. So when I wrote the policy up, I wrote the policy up that the owner was the mother and the insured was the child. The insurance company came back to me and said, well, because of his age, he's not 25 years and younger, he has to be the owner of the policy.
Okay.
You know, and so it's very important as it pertains like to the term policy. You know, I can't do it like that, but when it comes to whole life policies, I can write them up where the owner is a different person than the insured. But when it comes to the term policies, the if it's 25 and younger, the owner can be different than the insured. But if it's 25 and older, the owner and insured have to be the same person. Now, whoever pays for the policy, it can be somebody different, you know,
Okay.
so on and so forth. But like I say, it's a fine line with that, you know. And so, yes, as it pertains to your children who have durable power of attorney, they can write policies on you, and you can also write policies for yourself. But communication is the key. You know, communication is the key. There's one thing that me and my wife talk about in my household. Communication is the key to everything. We have to communicate on every end. Of course, yes, when you got a family member that's not compliant, of course, communication is not the key in that sense. But where you do have some sane individuals that are able to sit down and have a sensible talk, communication is the key. You know, communicate. Go
Okay.
ahead.
Day has a question. After she asks you her question, I have another one.
Okay.
Okay. My question is, um, I don't know why I didn't think about it earlier, but we're talking about like the youngest that a baby can be insured, like 6 months. What about like how hard is it to get a baby under 6 months with like health insurance because of things like SIDS or babies that came to full term, but when they were born, they passed after death, were born sleeping, or
So when it talks about things like that, so like with life insurance, if we're just talking about life insurance alone, it's a specified amount of time that has to go by, you know, for that child to be insured. The reason being is because when it comes to SIDS, when it comes to premature, you know, so on and so forth, we have to understand that the insurance company is saying, hey, you know, yes, I will insure you, but if the risk is great, then I'm not going to insure you. And so, as it pertains to a young child, a baby, you know, the risk of them living, you know, is very, of course, when we have a child, we're not thinking, hey, man, my child is going to die or so on and so forth. That's not what the prayer is. The prayer is that you're going to live, you know, and so in our mind, we know that our child's going to live, but to John Doe, they said, hey, we don't know, you know, because anything can happen. I had a brother who died of what's this called? He died in the crib. Was I think it was SIDS that he died from. My brother did before I was born. You know, I see some of my people on Facebook, you know, where their child died as well too at a young age, and so my children, I got three of them. Um, my last child, whenever he was born, whenever he came out, me and my wife almost, because my wife did a at home birth. All my babies was born at home in a water birth, and
that's
so the
beautiful.
last, huh?
That is beautiful.
Oh yeah. So, and so the last one, whenever he came out, it took him like a minute or so to catch his breath, and his skin was you know so on and so forth was turning, and it was very scary, and we had to slap him, you know, on the butt, you know, just to get some blood flowing through his body and so on and so forth. But it was scary because stuff like that can happen, and so as we are when you're breastfeeding, because my wife breastfeeds, you know, especially when they're a young age, you know, they can get smothered real easy. because they're very small and they're very fragile. So the insurance company are looking at all these particular instances and they saying, look, that's a great risk. And like any insurance company, they're gonna say, no, we don't want to pay out. And so they put a stipulation in place. Yep, when they get see the 30 days, I think it's 6 months. Whenever they get 6 months, yes, it's 6 months. Whenever they get 6 months, of course, they have passed that stage where, you know, they are prone to die. Not saying that they are not, you know, so on and so forth, but they are past that greater risk stage where the insurance company says, yes, I will insure your child now. Does that answer your question?
Yeah.
And then, Kamiri?
Okay, so my other question is, are you able to insure family members that are not in your country?
No. And so the only way that can be done if they have an address here in the state. You know, if they have a physical address here in the States, of course, yes, it can be done. If they got an address out of the state, then no, I can't insure them. You know, because like right now, I write business for over 12 different companies. And that's one of the difference between an agent and a broker. An agent can only write business for the company who he worked for. A broker can write business for multiple different companies. And so I write business for Mutual of Omaha, Liberty Bankers Life, Transamerica, AIG, American Amicable, Americo. I write business for John Hancock. You know, these are some of the businesses I write business for. And so these companies, they say we only going to insure right within the states, you know, the 50 states of America. As it pertains to outside states, then you have to look at other insurance. But myself, no, I couldn't offer that type of insurance. You have to, of course, have an address here in the States for that individual.
Okay.
And then you're not able to pull up that picture I sent to you?
For some reason it said I couldn't share it on the screen.
Do it need to be a JPEG?
Probably, more likely.
Let me see if I can get that pulled up, because I still want to try to answer that question that in reference to
also, if you have it in your phone, you might be able to share your screen from your phone.
Let me see.
It just depends on how you have it. So I know yeah, I can't because I'm on the computer. If I was doing it from a different screen, I probably could. Y'all forgive me. I've been traveling, so I'm sorry if I'm yawning.
All right, you can't really read that like that.
You can't really read
but,
it.
I'll just give
I'm gonna hold on. Let me see if I'm gonna try it one more time.
And while she's doing that, somebody was talking about.
Okay, there we go.
Okay, yeah. All right, go to
all
it.
Right. So, can y'all see that?
All right, make it big. Make it. You see the plus sign? Make it big. Yeah. All right. And so, as you can see here, we got on this far left side, you got illness and condition. And this is what me as a life insurance broker, these are things that I look at. You know, so you got 5 different companies up here. You got Americo, Mutual of Omaha, America, Amicable, John Hancock, and Foresters, right? So these 5 companies right here, on this first list, it's in alphabetical order, illness and condition. So if someone has AIDS, HIV, or so on and so forth, as you can see, with Mutual of Omaha, American Amicable, John Hancock, and Foresters, it's an automatic decline. Wow. They will automatically decline you if you have had AIDS in your life. It's an automatic decline off the top. As it pertains to Americo says, hey, you know, if you was diagnosed within the first 10 years, you know, if you was diagnosed within 10 years from today, then it's an automatic decline. But say, for instance, if you was diagnosed 15 years, my question would be, would they insure you, Americo? If you was diagnosed 15 years ago, my question would be, will they insure you?
I would say yes, because it says within 10 years.
Correct. They will insure you because you were diagnosed past 10 years. So you have lived a expectation. The expectation is if you get AIDS or HIV, 10 years, you're going to pass in 10 years. And if you're going to pass in 10 years, us as the insurance company, I'm not going to pay, because now you found out that you got AIDS. Now you're running to go get life insurance, but your life expectancy is very short. So no, I'm not going to insure you. All right. So this is what I'm looking at. Let's look at someone that has anxiety, right? So anxiety is right there, it's right above arthritis. So as it pertains to America says if it's mild or it's a situational depression diagnosed within last 6 months or been hospitalized from anxiety, they said I'm going to decline you. But if you was diagnosed a year ago, they will accept you. With Mutual of Omaha, they don't even ask that question. So you use possibility, you may be good. With the next company, they say if it's one medication and situational in nature, it's okay. But if it's major depression, they say it's declining. The next company, John Hancock, says they don't ask. And then the last company, Forrester, same thing. Mild onset after age 25, diagnosed more than 1 year ago, no hospitalization, it's okay. And so
So
as
would that fall for most mental health illnesses?
say it again.
Would that fall for most mental health illnesses or those that are related? Like, for example, like PTSD or
So with PTSD, do you take medications for it?
not anymore.
Yeah, so that's the thing that we have to look at. So when it comes to anxiety, it's medications that's connected to anxiety.
Mhm.
With HIV, it's medications connected to it. No matter what your condition is, it's some type of medication that's connected to it. And so that medication, this is a list. Excuse me. This is a list right here. So if you want to keep scrolling down. So this shows me a lot of, keep scrolling some more. This shows me some of the conditions or medications that people may take, right? And so with these medications, it's like metformin.
Wait,
Metformin,
wait. Before you get to that, I'm looking at the first thing on the top of this second sheet. So anybody that goes to like a assisted living place
if they live in there,
is automatically declined.
automatically decline. Because if they're in assisted
Wow.
living, they are at they pose a greater risk to the insurance company. Right. This is I'm just giving you an inside look of what's going on with the insurance companies because, like I said, I want to educate you, but I also want to be your agent or your broker that helps you get insured. And so these are things that I'm looking at. This is my cheat sheet, that I'm looking at, so on and so forth. And so if it's an assisted living, that means that something has happened in your life and you are actually on your way out the door. And if you are on your way out the door, then the insurance company is saying, no, I'm not going to insure you.
Wow.
Yeah. And so these are things that the common individual don't know anything about. But like I said, I want to give you the inside look because getting the inside look is you have a better understanding on life insurance. If you have a better understanding on life insurance, that means that you can make a better choice with what type of policy that you have. And also you will make a better choice when writing that policy up to tell the truth because it's going to come out. If you don't tell me, it's going to come out on that MIB.
So for the list of insurance policies that are here and their terms for these things that are declining, is there a life insurance policy that allows these things?
Correct. So this is just 5 companies, and you remember I shared with you I write for about 12 different companies. So these companies specialize in term products. All right, they specialize in term products, and so you got other companies that even not with them, they'll say, look, we'll go ahead and insure them. so on and so forth. But it's things that you have to fill out in order to see are you insurable. Like if you go down to the F's, right? Go all the way down to the F's where you see the F's at. All right, hold up right there. All right, go back up just a little bit. All right, so you got no right there. All right, so you have felony, right? So you have felony. This just happened to me. I done wrote 2 cases where one individual had felonies. He was charged 5 years ago, but he recently just got off probation 2 years ago. And so if it's within 10 years with that first company, they're going to automatically decline you. The second company, automatic decline. The third company, they say if it's 5 years or less, or if it's within 5 years, I'm going to decline you. And so I had an instance where one individual, I wrote him up in that third company. He had been on probation for almost 2 years. So I said, look, I'm going to go ahead and try it. Because his charge was from 5 to 6 years ago. So I was like, I'm going to go ahead and try it. And he got declined. He had to fill out a paper and he got declined. The second individual, I went and wrote him up. He was charged in 2016. He got off probation in 2018. But when they looked at him, he had never got in no other trouble. He wasn't no smoker, no drinker, none of that stuff. And I got an email on Saturday. He got approved. And so on and so forth. So when it comes to what type of condition or what type of illness you have, it tells me what company to go with. It's like, say for instance, metformin. Metformin is connected to insulin. Insulin is connected to diabetes. So it is some companies that will not insure you if you have diabetes, but you have other companies who will insure you if you have diabetes.
Okay, you have a person in the chat that said, I'm trying to get $1 million policy on myself, but a lot of the companies that I have tried to go to want you to weigh a certain amount.
Correct. So go all the way down to the bottom. Like, so I'm just giving you an inside look. This is my cheat sheet. All right, just stop right there. Can you make it bigger and go to the right there where that chart right there?
This part?
Yeah, the blue part. Yeah, if you can make it big so that we can kind of look at that.
Hold on.
All right, so if you guys can see that, right? So this is a term policy. If you are 4'8", they say, look, if it's a HBO cash back option or 125 back option or 100 back option payment particular, they say, hey, your ideal weight need to be between 78 and 189 pounds. So these are their guidelines that they have. Because if you are 4'8", you weigh 250, guess what? That means that you are obese. If you are obese, that means that you are prone to insulin or diabetes. You are prone to heart problems. You are prone to disease if you are obese. And so when they look at this particular thing right here, they look within their guidelines and they say, well, she is 4'8" or he is 4'8" and weigh 225, then they're going to decline you. Automatic decline just because of build. But it is companies out there like Aetna, that will say it doesn't matter how much you weigh, I will insure you. All right. And so, yes, when it comes to your build, your height and weight, it is very important. Because
so where on this part of the chart right here, where it has the HMS plus with the ADB?
Yeah, so ADB is accidental death benefit. So that's an accidental death benefit policy.
Okay.
So that means that if you was to die, some people, so I just had to do this. I had an individual who I couldn't get insured because of the medications that he was taking. And so I let the individual know, the wife know, hey, what I can do is an accidental death benefit policy, meaning that if he was to die by accident, then you can get a portion, but it has to be deemed an accident. Very low cost product. $200,000, just $40 a month, but it has to be deemed an accident. And she was like, well, I'll go ahead and do that until 2 years from now when I can insure him. When I can insure him, then I will let that go. But right now, I just want something that if anything happens, like you said, you can go out there and get in an accident. And because it's deemed an accident, he died by accident. Now he got a death benefit in place that is going to be paid out, so on and so forth. And so, but yes, it is a weight and bill that's connected to every policy that insurance companies go through. It's just like when you go get a loan. When you go get a loan, you have underwriters that look at what's being put to the bank, and they say, nope, I'm going to deny this loan because they don't have the sufficient money to pay for this loan, or they haven't been at a job so long. I'm going to deny this loan. And then they got the underwriters that say, hey, yep, that's a good prime candidate. I'm going to go ahead and give them this loan. So myself, I am the first underwriter that you're going to meet. In other words, I'm going to write up the policy, but as I'm writing up the policy, I'm looking at your condition. I'm looking at your house. I'm looking at your surroundings. I'm taking an assessment of what's going on with your life. Because for one, like I said, I want a lifelong client. When I write up a policy, I want a lifelong client. Number two is if you're not gonna be a lifelong client, then I'm not gonna help you if I write the policy up, and you're not gonna help me. In other words, what people don't know, this is what people don't know about life insurance. We as agents have connected to it what's called a chargeback. Well, what a chargeback is, every company has it. It doesn't matter what company it is. You can go into a convenience store. They have something that's called a chargeback. And what a chargeback is, say for instance, I write a policy up today. That policy costs $100 a month, right? And so with that $100 a month, the person gets the policy. Yeah, let me get the policy. But then when something bad happened, the first thing they do, they let that insurance go, or they just forget about it and just let it go. They had it for 2 months. So myself, I got what's called an advance commission. And with that advance commission, they saying, hey, if they keep this policy for a year, here's your advancement for this policy. But if they renege on this policy, or they let this policy lapse within 2 months, 3 months, 4 months, so on and so forth, that money that I advanced to you, I want it back. And so that advancement, I lose. And so it is my job that when I sit down with you, I want a lifelong client. The lifelong client means that I'm helping you even as you are helping me. I'm helping you in the sense that you are insured now, and I got you on a policy that you can afford. I met your needs, that you told me about. I met them. And as I met them, my reward for helping you is my commission. And so I don't care if I got to write a policy for $30. If that's the policy that you want, that's the policy that I'm going to write. If that's a policy that's going to keep you on the books, that's the policy I'm going to write.
Okay, I have a question about what I'm looking at on the screen right now. So okay. Where it says Guarantee Universal Life Express. Can you explain that?
So that is a GULE, and what a GULE is a whole life product. And so with this whole life product, so it's the difference between the Guarantee Universal Life Express and the Index Universal Life Express. So these are whole life products, and they have what's called cash values that's connected to it. And so as you can see here, it says it's a level death benefit for guaranteed periods. All right. So the Guarantee Universal Life Insurance policy is for a certain amount of years, they're going to guarantee you a rate. All right. And what that rate is, meaning that after that guarantee rate goes out, so say for instance, if you got a 5-year guarantee rate policy, after 5 years, it's a possibility that your premium is actually going to go up after that 5 years.
Okay.
Because It says level death benefit for guaranteed periods. And so that guaranteed period, whatever that guaranteed period is, if it's 5 years, 10 years, whatever it is, that premium is going to go up. And so myself, I don't necessarily write a lot of GULEs. I like to write an index universal life insurance policy. And what that one is for somebody that's looking for a private bank. All right. And so as I share with you about the market, the stock market, and particularly the SP in the stock market. So the IUL, it performs just like the stock market, right? It performs like it, meaning that your policy, that cash that's building up in your policy, it is building up cash on it based on the interests that it is gaining. It can gain anywhere of a plus of 7%, even down to zero, capping out at zero, or bottoming out at zero, bottoming out at zero, but it's compounding upon each other every year. So if the stock market has done good the whole year, then the next year, when you look at your policy, you're going to see your increase in your cash value. And so that's the difference. That's what a GULE is, and an IULE is.
Okay.
And so remember, I was talking about the home protector and talking about the return of premium. So this is one company that will actually have a return of premium. And the return of premium is only connected to the 20-year and the 30-year. When you look at the 15-year or the 15-year or below, they don't offer the return of premium on those. But as you can see there, it has what's called living benefits connected to it. And what the living benefits is you got what's called a critical illness rider, and it's free. It comes with it. Critical illness rider. If you was to get critically ill, you can draw up to 100% of that money out of the policy, and you can use it to do whatever you want to do with it. If you got a chronic illness, same thing. A terminal illness, same thing. You can use the money for whatever you want to. You can draw up to 100%, and it just depends on, of course, what you can afford. Because sometimes, like with this particular company, when it comes to the living benefits, it costs about $2 to $3 more than what it normally costs. But you got other insurance companies, but it actually comes with the policy. So it just depends on you, your money, and who we can get you approved with.
Okay. You have a person that asks, which is better, whole or term?
It depends on the individual. I had a lady that looked at me. She said, I hate whole life policies. I want a term policy. Give me a term policy. So what I did was I tried to let her know, because she was up in age a little bit. She was in her early 60s. And early 60s, when you're looking at policies like that, it's going to cost a little bit. So, but she wanted enough money to be able to pay for her house. So she was like, nope, don't give me no whole life policy. Give me a term policy. So I found just that. I have other individuals who I have met where they say, hey, I want a whole life policy. Give me that. And I give them that. Myself, I got both. The reason why I got both is because I'm like I said, I'm 40. So when it comes to 40, when I go get a whole life policy, this is what I didn't share earlier. This is the difference between the two. A whole life policy, it costs a little more than a term policy. The reason being is because they are saying, look, I'm going to insure you your whole life. And because they are going to insure you your whole life, it costs a little more because you're going to live a little longer. They saying, look, you're going to live a little longer, but I'm going to tack on a few more dollars just to compensate, the money that you put into the policy. I want to compensate it because you're going to live a little longer. With a term policy, they actually betting on you outliving the policy. And because they betting on you outliving the policy, they saying, hey, if I can get them to pay that $18,000 for 30 years, and that's money in my pocket. Yeah, I'm going to do that. I'm going to charge them less. They betting on you to outlive the policy, so on and so forth. So it's just, it boils down to the individual. If you educated on the life insurance, then it's just depending on you. I talked with a lady this week. She has a term product. She's paying like $150 some a month. And she questioned me. She said, this is a term policy. Is it going to end, in 30 years? And I shared with her, yeah, it's going to end in 30 years. But then I went on to share with her and I showed her the policy that you got, it does not have a return to premium with it, nor does it have living benefits connected to it.
So did you end up rewriting her?
No, I'm gonna tell you the story. And so with her, I told her what she needed to get if she was gonna do a term policy. Let's do this particular term. Let's do a return of premium, and it has the living benefits connected to it. She said, well, hey, James, so what about the whole life insurance? What about that? So I shared that with her, the whole life insurance, but she's a smoker. And that's another topic because she's a smoker. That insurance policy costs a little more. So she was paying $158. And with the whole life product, she said, look, I don't want nothing less than $100,000, nothing less. So as a smoker, when I looked at the rates for a smoker and how much she was looking for, along with her age, it was like $227 for that amount, versus the term product where it was like $115, wow. So on and so forth. And she said, look, James, I want the whole life product because I want security for the rest of my life. The term product is good. The return of premium is good, but I want a whole life product. She went and looked at her finances and she came back to me. She said, James, I looked at my finances. I can't do nothing just yet, but I want to get out of this term, but I don't want nothing less than $100,000. And so she told me to give her a month or give her a month and a half to come back and she have her finances in order. So that's what I'm doing because I want to insure her. I want to help her, but I don't want to put her in the jam as well either because I'm listening to you. And as an agent, it's my responsibility to work for you. You don't work for me. I work for you. You are like my boss or manager. And I'm gonna give you my suggestions. And as I give you my suggestions, then you in the end make the choice on what you're going to do. Because I don't want to upsell you on anything. The only thing I want to do is get you insured. And so as even like talking to you, Kamira, you say, hey James, this is the amount that I got. This is how much I paid. And Kamira, what did I do? I went and looked at what I had to offer. And as I'm looking at what I had to offer, I couldn't beat your price. Right. I couldn't beat the price that you had. So what did I tell you? Hey, keep what you got. That's the best. If I can find something better than what you currently have, then I will come back to you. Other than that, I can't right now. I can't help you. You got the best, and that's what I have. That's what I have to do. Because like I said, I don't want to put people in the jam. Because if I put somebody in the jam, then I haven't done my job.
Okay, so if a person wanted to start doing what you do.
If they wanted to what?
If they wanted to start doing what you do, right?
Oh yeah, contact me. I'm hiring always. I'm always looking for other agents, or I'm always looking for other brokers to join the business with me. And so if you wanted to reach out to me, or now when it comes to wanting to get into the business, is very easy. And with the company who I do business with, if you was to come into the business, of course you will go up under me. And as you go up under me, they will actually pay for you to get your life insurance license. So the course that it takes for you it normally costs about $400 to $500. They're going to pay for it for free. Only thing you have to pay for is the exam itself. And the exam is roughly about $49, $50 for the exam in your state. It varies by state, but it's normally roughly about $50. So if somebody wanted to join, all they got to do is just call me, or they can actually go to the website and put in, that they want to become an agent, but they want to put my name in there. James Watkins is the person that referred you. And as you do that, you're going to be on my team, and I'm going to help educate you and actually help you scale your business to the next level.
Okay, so um, when you become licensed, you only become licensed in the state that you're in.
Up front. So like right now, I have what's called a residence license. My residence license is where I reside at, which is Washington State on the West Coast. But currently, I am also licensed in 7 other states. The states that I'm currently licensed in is Iowa, Colorado, Tennessee, Georgia, Virginia,
Yeah.
and North Carolina. So those are all the companies that I'm currently licensed in to do business in. You know,
Okay, so
right
did
now,
you have to take a separate exam for each state?
no. So once I get my residence license, then you can turn around and get what's called a non-residence license. And with the non-residence license, the only thing you have to do is fill out the application. After you fill out the application, you pay the fee, whatever that fee may be for that particular state. And so,
Mm.
like right now, I just talked to somebody who I know in Ohio, and so I'm actually I'm going to go get my Ohio non-residence license. And so when I get those licenses, I'll be able to help him in Ohio. And so
Okay,
those,
you have a person that just asked, what about California?
yeah, California, same thing. You know, you go apply for your license, pay the fee. You know, well, actually, take the class. After you take the class, you go take your exam, get your license. After you get your license, then you are able to sell life insurance in California. That's your resident states. And so after you get your license in your resident states, then you can start applying for license in other states. And so
Okay.
myself, I'm looking to be insured in all. I'm looking to be able to do business in all 50 states. Right now, I can currently do about 8 right now.
Awesome.
Yeah.
Awesome.
So back to the siblings thing. If you want to insure a sibling but they live in a different state, it has they would still have to be like, would they have to have an address? So like I live in Virginia. My brother lives in Connecticut. If I wanted to do a life insurance policy for him, would you be able to do it?
Yeah, I can do it. Because, it boils down to, as long as you know his address, his social security number and all those things like that, we can definitely write something up. Like I said, this is something that we'll talk outside of this, and I can definitely share with you and help you in that particular
So it
area.
wouldn't matter the state that he's in.
No,
Okay.
because what matters is me as the agent. I have to make sure I write the application for that particular state. So say for instance, with him staying in Connecticut, this is where he always is. If he don't have no connection to you, meaning that he don't come down to North Carolina or to Virginia, spend time with you or never stay with you, so on and so forth, I want to make sure I write that policy up for Connecticut. Because for each state is different. For example, in the state of Washington, I cannot, with Mutual of Omaha and other companies, I cannot write a children's whole life policy in the state of Washington. I can go over to North Carolina and I can write up a children's whole life policy in the state of North Carolina, but when it comes to my resident state, I can't do it.
Okay, why is that?
They don't offer it. So for whatever reason, they don't offer children whole life policies with Mutual of Omaha in the state of Washington. It's just like an accidental death policy, just a straight accidental death policy in the state of Washington. They don't offer that in the state of Washington. For what reason, I have no idea. But I just know it's some products that I can offer in Washington that I can't. That There's some products in the state of Washington that I can't get, but I can go into another state and get those products in the other state. It's
Okay.
just like chips. I'll use this example. When you go into the hood, you will see a certain brand of chips offered in this particular hood. But when you go to another community, that particular brand of chips in that community or in that hood is not offered in this other community. If that makes sense. You know, I don't know why it's like that, but yeah, it is like that. So it just depends on me having to make sure I write the policy up for the right state where the individual is going to be residing at or staying at.
Okay, so right before we get ready to get off of here for the night, what is some of the lasting things that you want to say to the people? I have already pinned your information in the chat, and I'll repin it when the chat is when we're done. And I've already put his phone information also in the chat too, as well, you guys. So you have a way of being able to reach him via the website and the phone number. But he did say that if you go onto the site, you may not actually get him per se. So this is the reason why he gave out the phone number, and he can help you guys through. He can help you guys through that way as well. So, what is some of the lasting things that you would say to the people before we close it down tonight? Because it's starting to storm outside really bad, and I don't want y'all to get cut off.
Yeah.
So go ahead and tell me what's the last stuff that you have to say for the folks.
So the last thing that I would say is how we began this particular podcast today. Legacy is important. It's so important that we have to make sure that we talk with our loved ones, our children, our spouses, or whoever it may be about the double D's. What are the double D's? The double D's is debt and death. They're the most important things that we need to talk about. You know, of course, outside of education and all those things like that, they are the most important things to talk about. Because one thing that we always do, we are going to die. Let's talk about it. Don't be scared of it. Embrace it. And when I say embrace it, I don't mean, go out there and go find a way to die. I mean, embrace it in a good way. Set yourself up as well as your children, your spouses, your beneficiaries, whoever it may be, set them up to succeed or set them up so that if you do got debt, it's taken care of. Or if you got funeral arrangements, it's taken care of. Set them up because legacy is very important. All agents are not the same. All brokers are not the same. And so come in and sit down, talk with me. I have your best interest in mind because your best interest is my best interest. And with that being said, I'm gonna help you out in whatever circumstance that you have. And I'm gonna be honest and I'm gonna give you the black and white because that's what a lot of agents don't give you is the black and white. You find out later on down the line that you was lied to. Myself, no, I can't. As a follower of the Savior, a follower of the Bible, it is my duty and also my job to make sure I live with integrity. Integrity is doing the right thing, no matter who is looking or whoever you're talking to is doing the right thing. And the right thing I have to do by people with the opportunity to help with life insurance. Okay. To help with life insurance is to make sure that I tell the truth and all the way across the board so that I can have a lifelong client. And like I said, if you do go through the website, if you ever get in contact with anybody, you just tell them vehemently, I want to talk to James Watkins. Give me James Watkins' phone number. And if you be adamant about that, they will be sure to get the message to me. And as they get the message to me, I will be sure to reach out. But if you want a direct contact to me, then I would say use that number that's in the chat because that is my direct number. And I will send over my business card to Cameria, and she can also send that out as well too. But yeah, remember the double D's, death and death. Right. Let's not skate across the room and miss those two elephants in the room because they are big.
Well, that's a good thing because I think a lot of people don't equate final expenses with death. Mm-hmm. And you got to understand that even though a person dies, a person can die with death.
Yeah. Yep.
So, it doesn't mean that everything is A-okay just because they passed away. They can still die with death.
Yeah, and they come haunting you.
Right. Yeah. Right. And then in some states, you are responsible for paying the debt. Yep. Even after the person passes away. So, and we'll talk about that on a different show. But
Yeah.
just so y'all know that some states you are responsible to carry over your spouses or whoever's debt. And so you have to be careful with that depending on where you are.
At
Yeah.
my parents, I hope y'all watching.
Right. I mean, everybody, I hope they watched. I hope y'all really took notes and wrote some stuff down. So in case you didn't know, if you didn't know what term was, if you didn't know what whole life was, now you know. If you didn't know what certain types of like he said with the mortgage protection. I mean, you got a lot of people that don't even tell you about that.
Yeah.
They don't even give you that option. So, like I said, it was awesome to be able to have you on tonight. This is not a finished show, y'all, because I'm sure it's much more that he did not actually cover. And so he'll be able to come back up here and do this again another night because I really truly feel like he needs to come back and finish it because it's a lot of stuff that I think y'all really didn't get know. And you still don't know yet because it's a lot when it comes down to insurance. The
Correct.
little what we call the little fine lines and the little words that you can't see on the screen, those type of stuff. That type of thing is what I think that y'all, everybody needs to catch the gist of. And again, no, this we thought about putting this show together way before I dealt with the issue that I dealt with over the weekend.
Correct.
So, no, this show is not due to the fact of my loss. This show we talked about this what a month ago.
Yeah, about a month ago.
About a month ago. So
I was just telling my wife, I would have when me and you put this together,
right,
ever known that you'd be going through the circumstance that you're going through on this
right,
day when we supposed to be doing this.
right. So and it's just ironic that it happened around that time, but I still felt like it was the perfect time to talk about it. And I mean, because at the end of the day, like I said, you do not want to have to deal with trying to figure out how you're going to put a loved one away. I
Correct.
promise you, you don't want to. That's the last thing you really want to think about when it's that time. You just want to think about getting everything done and getting it in order. The last thing you want to think about is, wait a minute, okay, I can't afford it, or the policy ain't this ain't gonna work, or I didn't even know that the person canceled their policy and didn't tell me. You don't want to have to deal with none of that because that can happen. A person can have a policy, let it lapse, and the family don't even know. So it's a lot that's behind final expenses. This show tonight was very important. I hope that you guys that watched it, that you got what you needed. If you didn't, go back and watch the replay. Please share it. Okay. That's what I want y'all to do. I promise y'all he'll be back and I'll let y'all know when. But I'm telling y'all, please like, share, reshare what you watched tonight. If you have any questions, click on the link in the chat to find him. Also, his phone number is in the chat as well. I was just suggest that you just send him a text message
Yeah, that's the
instead of
most
going to
effective
the
thing.
link. Right. I mean, that would be my personal thing to tell y'all to send him a text message instead of going to the website link because his text messages go directly to him. So that's what I would tell you to do. And thank you, sis, for saying that you. I appreciate you as always because you always come on and support and you always share. And this is my friend that's in California, because she was the one that was asking you the questions about if you were able to sell insurance in her state.
Oh yeah, that like I said, we just what was it, Miss Camille? Call
Is
me.
it? Yeah,
Is yeah, Carmel. Is
yeah.
that I said right? Carmel, call me. And we can definitely set something up. It's nothing for me to apply for license in California. There's nothing for me to apply for license in any state. But because there's a price connected to it, I'm just not going to do it. If I don't got no clients there, no, I'm not going to apply. But just as soon as I know I got clients in that particular state, then yes, I will apply. And yes, I will get appointed in California, Texas, whatever the state is,
Awesome.
Illinois, Michigan, doesn't matter. I will apply and get appointed in that particular state.
Well,
My goal is
she
50
just
right now.
said that she gonna call you. So
Yeah. Yep. I got it.
that'll be awesome for you to be able to do all 50 states. That would be
Yeah,
awesome.
that'd be
So,
lit.
and I'm gonna say hats off to you. Congratulations in advance. And she said Cali is popping. I'm sure everybody, girl,
It
everybody need
is.
insurance. Y'all got whole earthquakes. Y'all fall through the ground.
Hey,
So y'all need some good coverage.
Mhm.
Okay. So yes, I get it. And it's a joke. I love you. Yes. It's a joke. I love you. And
Washington
again,
State and California, bring me, take me back.
right.
that's right.
And again, I want to say thank everybody for the prayers. It has not been an easy weekend. It still ain't easy right now, but y'all know me. I get up here and I do things with a smile because I do what I got to do no matter what. So, but I really do appreciate all of y'all. I thank y'all for being the best supporters that I know. For those of y'all that are in my prophetic intercession group, thank you. Love you guys dearly. All the prayers have helped. Thank you, cousin, for praying for me over the weekend. And again, you know, I just want to say thank you to everybody that has reached out to me via inbox or otherwise on my page. I am taking it as well as I can, but I can say that I'm at peace, about the situation. My father was my dude. He called me every day, so it's a heavy hit, but I know he's in a better place, so that's all that matters. And like I said, I thank y'all for joining me tonight. Thank you, Day Day, for coming on for me.
Of course.
Um, and I love you guys to life. Y'all know that's my motto. I love y'all to life. Speak life into yourself. Again, get your house in order. And I don't just mean your physical house. All
Yeah.
right. So we will have him back again, y'all. Again, I will keep y'all posted. That this is not
Hey,
going to be the last time.
hey. Then just so y'all know, me and Camiria are cousins. This ain't
Yes.
that we just saying. She's a Watkins. I'm a Watkins. And I was gonna ask you, is her mama Barbara?
No,
Uh,
no. Her mom is actually my other. Her
okay.
mom is actually the other podcast host. So you know
Okay.
how we take on family all the
So
time.
that's your mother just right beside you in the picture. Well, you
Yes.
look like her.
Wait, am I going? Am I next to her? There
Right.
you go.
So yeah, that is the other podcast host. And she couldn't make it with us tonight because she's busy at work. So but she'll be back with us later on in the week. So
All
yes,
right.
but she'll definitely be on next time you come back on.
All
So
right. Well, yeah, I appreciate y'all guys having me, and let's coordinate the next one. And like I said,
yes,
we'll dive in a little more. 'Cause like I said, we only just hit a portion of it. We just,
unfortunately, right.
a little bit of the term and the mortgage products, but it's, like I said, it's more products than just, what we talked about today.
Right. And so next time, make sure you send me all of your slides ahead of time, and we'll make sure we have them all ready to go so I can share the screen and we can be a little more interactive with it because I like that everybody was able to see that tonight
Yeah.
so that they
Inform
can
me ahead of
see
time so I
things
can bring my notebook.
Yeah.
right. So that but I like it that they were able to see what could deny you and what was okay. And so you can look at stuff that said, oh, well, if it was 5 years, if you've been 15 out, that means you should be okay. If
Yep.
this said it was, so I'm glad that they were able to see that. And some of the stuff, like I said, with the assisted living thing, that kind of took me back, like, wow, really?
Right.
So I was like, okay, well, it's a lot of stuff
And
that they
just
can
know,
deny.
that was term. So that was term what we was looking at, the guidelines with term.
So
So with
that wasn't
whole
your
life,
whole life.
yeah, the whole life is got other stipulations connected to it. That was just a term.
Okay, see, that's why I said, y'all see he got to come back. So
Yeah.
that wasn't even everything together. And that wasn't all the companies either.
No.
So yeah, you definitely got to come back.
Yeah.
So again, thank you. You gave out such a wealth of information tonight. I hope that everybody that was watching got what they needed to get so far. If you have more questions, please do not hesitate to reach out to him via his phone line that I put in the chat. If you don't see it anymore, I will repost it right before we get off. So give it to me one more time.
So it's 509
Mm-hmm.
279
Mm-hmm.
9721.
And
So 509 279 9721.
all right, there y'all go. I reposted
East
it
Coasters,
again.
he's on the West Coast, so there's a 3-hour time difference.
So
Yes.
don't worry about it. I'll be up at 3:30, helping people out in North Carolina, 6:30. I'm like I said, I'm
entrepreneurs
here.
don't sleep.
Yeah, I'm here 24 hours a day. If I gotta write a policy or educate somebody on it, I'm here for you. Because a lot of people don't have that. And like I said, I want just like your wallet is in your back pocket, I want to be in your back pocket. I want you to be handing my information out to everybody who you see or who you
Right.
know about life insurance, because I wanna have a lasting impression on
Well,
you.
I
Your,
definitely want to link up with you about becoming a broker.
yeah.
That's that I mean, I know that it's something that I could easily do.
Yeah.
And as you can see, I'm very adamant about making sure that people have care, proper information, that type of stuff. Because I don't want nobody to be kept in the dark about nothing that can help you in the long run. That's one of my biggest things. So
Right.
we definitely gonna link up about
That's
that.
right. Yeah.
We'll touch with you about that later on this week.
Let's do it.
But I want to do that so we can get that ball rolling. But
Yeah.
I'm telling y'all, reach out to him. Don't hesitate. Y'all heard it come out of his mouth himself. Even though he's in a time difference, he said that he'll pick up the phone. Like I said, send him a message. He'll call you back. All right. So I guarantee you that he'll get the job done. Trust me. When I found out what he was doing, we were back and forth with phone calls. So I'm telling y'all,
Right.
he'll call you back. Okay. And it ain't just because we family. That's what he do.
Yep.
All right. So at the end of the day, I want y'all to just be aware of your options. Let's put it that way.
Correct.
All right. So don't wait too late. That's the biggest thing. Do not wait too late. So
Right.
James, I love you, baby.
Hey.
Please tell your family I said hello, because I see the little kiddos kept coming in for you, so they want their daddy.
Yeah.
So I will see you next time, and I will talk to you later on in the week. Day, love you much.
I love you.
I'll probably talk to you after we get off this phone, but love you much, and I will see everybody later on. Like I said, love y'all.
Take care.
Have a great night.
Good night.
Good night.